Good morning, everybody, and this is your Dow Jones setups for today. So S&P's got some interesting price action on it, and the Dow kind of followed suit, but not in the same light. So I am not going to fall into the trap of assuming that the Dow's going to follow the S&P. Done that before. It didn't go very well, but typically it does eventually. But the problem is the market can be against you far longer than what you can actually stay solvent. So sometimes it's best just to pay attention to what's going on. Anyway, first things first, let's just see if we have a Fibonacci expansion here as well. So a little bit further down than the 61.8, and a real level. Now, I don't see any. There's lots of pin bars here, but didn't really pay attention to those pin bars. I'm going to put them in. There's the one pin bar there, and the other one is there as well. So that's the zone 38,384. Moving averages are not quite bullish, so they're still quite bearish. Oscillators are pointing up. So yeah, this could be up, could be down. There's no real signal there on the 8-hour of what's going on. If you look at the 3-hour, moving averages are also still bearish. Oscillators kind of rolling and looking up, so we could see this as a big move up, big move down, and now we're looking to form a higher high. So we formed the higher low, which is now there. So if we break above the high of the week, that would start setting things into motion for the longs. And on the hour, if you look at your moving averages, so the faster moving averages are bullish, although they're flattening out at the moment, but we are still below the 150 EMA. And remember, the 150 EMA is our trend signal. So this at the moment, it's not a bull trend, it's not a bear trend, it's sideways, but big up, big down, could be big confusion, or we start breaking these previous highs here, then we start looking for a stronger move to the upside. So I am leaning towards just waiting this one out at the moment. So you can see most of the session was down, didn't really, and then we came down to a level here on the 15-minute. That's why you always want those 15-minute levels in as well. Always have your higher time frames in and then put the levels in on the 15-minute. So when you see this happening, you could have taken along here, but this is at 7 o'clock in the evening my time. By then I'm not even watching the charts anymore. So anyway, that was missed. I think for me, this is a sit on hands. I don't think it's worth trying to second guess what's going to happen here on the Dow. The S&P definitely has some really solid structure for a move to the upside. So, that's looking really good. But remember, there's a lot more stocks in that than there are in the Dow. It's 500 stocks versus 30. So, that's more than likely why you see a stronger move there as well. And also a lot of tech stocks in there. And there was quite a number of tech stocks that were on a tear. So yeah, I'm on the sides here, guys. I think the only thing that's going to get me even considering this is I want to see us get above 38,630 and come back and test this early in the session. Then I'd be looking for a long there with a stop just below. So it's a 100-point stop loss. Then I'd definitely look at that. But for now, if we're going to do this kind of volatility again, so another leg down and then another big leg up, I'll just stay out of it because there's no real structure apart from where we turned. If you look left, there's nothing here. It's only overhead resistance that we have. See there, that's overhead resistance there. So that's the only fractal, only series of fractals that we've got. So I'm not really keen on that. So look at this as a range We break to the downside, you're probably going to come back and test 38,384. If you break to the upside, you'll probably bump your head up here, 38,660, a little bit higher, turn around, find support, and then you'd be looking for opportunities to the upside. But until something like that happens, I think I would rather just sit on the side, pay attention to the S&P 500 rather. It's a little bit more structured and looking a bit more probable than what this is. Okay, anyway, that's me. Hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.